Precious metals and precious metals equities comprise less than 0.5% of the total savings and investment assets in the United States. Less than 0.5%. The 4-decade mean is 2%. The market share of precious metals and precious metals-related assets returns to mean. Demand for them increases fourfold. And that's what I think happens. Does it happen in 2 years, 3 years, 4 years? I don't know. I have no idea. What I do know is that a gold bull market, a gold equivalent bull market, is such a profound event that if you're 2 years early, like I was on uranium, it doesn't matter. The amount of money you make, particularly given the fairly low level of risk, absolute risk, that you experience deploying capital now, is silly.
Veteran resource investor RickRule of Rule Investment Media shares his thoughts on the mining sector and opportunities in the precious metals market. Notably, RickRule observes that if precious metals constitute 2% of total investment assets, then their demand could surge fourfold. Gold spiked in March, with the move taking some investors by surprise, given there's been no major change in the outlook for when the Fed will start cutting. While noting a significant observation, RickRule underscores the gap between gold prices and the performance of gold stocks, attributing it to decades of poor performance within the mining industry. Meanwhile, he points out the paradoxical situation where the free cash flow has declined despite the sevenfold rise in gold prices from 2000 to 2010. The 2000s brought about a general upward trend for gold, especially as investors sought safety during the 2008 and 2009 financial crises. In 2007, your 1972 investment in gold would have been valued at about $1,285 in 2010. It would have been $2,166. However, the 16.5% decline in gold stocks since January 15th echoes volatility, notably reflecting investor concerns about interest rate hikes. In his outlook, RickRule shows optimism regarding the potential momentum buildup in gold stocks, as he believes in certain standout companies within the struggling sector. However, gold miners continued to underperform the commodity, but after falling 17.5% between December 28th and February 28th, as measured by the VanEck Gold Miners ETF, gold miners' shares might finally be catching up some lost ground, having gained 15% since February 28. Newmont Gold Corporation, the top holding in the ETF, gained 6.3% last week. Barrick Gold Corporation gained 5.5% over the week. Nonetheless, it's worth mentioning that investing in gold mining companies is seen as one of the best approaches to tapping into the gold market's potential. Now, we present the clips of RickRule's insights from his recent interview with Investing News. Before we continue, please subscribe to our channel and activate the bell icon for timely updates.
As great a disconnect between the gold price and the gold stocks in my career since the early part of the 70s. I have also not seen as much investor hostility to gold stocks since 1970, nor have I seen gold stocks at these valuation levels relative to book or relative to free cash flow. So the industry suggestion, the market for gold stocks is at record lows is accurate. Now, I would argue, unfortunately, that the mining industry deserves that. Investors' expectations have been set by 50 years of poor corporate performance in the gold business. The gold industry needs to own the fact that in the decade 2000 to 2010, when the gold price went up sevenfold, free cash flow per share in the Philadelphia Gold and Silver Index fell. It took real talent to generate declining free cash flow in the face of the sevenfold increase in your price. And the juniors actually are worse. What investors need to understand is that although I think if you buy the sector, you go broke, if you buy good individual companies, you get rich. There are a few performers, both among the majors and among the juniors, that deliver so much value and so much performance that they add legitimacy to the whole sector. And I think it's that dichotomy people need to come to understand. I think, too, if you're going to participate in the sector, we learned, you and I, as an example, that you participate in uranium when nobody wants to be there. And the fact that nobody wants to be in gold is its greatest attribute. Momentum gets established in the gold stocks. What I think that you'll see, likely, and I don't want to give your baby too much hope, but I think it'll gap up. That's what's happened in past markets. When you exhaust the sellers, it gaps up. Here's an interesting statistic for you, Shaw. Maybe I've used it before. Precious metals and precious metals equities comprise less than 0.5% of the total savings and investment assets in the United States. Less than 0.5%. The 4-decade mean is 2%. The market share of precious metals and precious metals-related assets returns to me, demand for them increases fourfold. And that's what I think happens. Does it happen in 2 years, 3 years, 4 years? I don't know. I have no idea. What I do know is that a gold bull market, a gold equity bull market, is such a profound event that if you're 2 years early, like I was on uranium, it doesn't matter. The amount of money you make, particularly given the fairly low level of risk, at absolute risk, that you experience deploying capital now, is silly.
RickRule emphasizes the appeal of silver stocks to speculative investors due to their performance during silver bull markets. Despite acknowledging associated risks, he underscores the potential within the silver sector for those ready to navigate its intricacies. In this context, First Majestic Silver emerges as a prominent player, boasting extensive land holdings in Mexico. In 2023's fourth quarter, First Majestic's total silver equivalent production increased 6% quarter-over-quarter to 6.6 million ounces. For fiscal year 2023, the firm produced a mind-boggling 10.3 million silver equivalent ounces. So if you're optimistic about silver in 2024, consider investing in such companies. By doing so, you can ride the wave of a rising silver price without even holding physical silver, which echoes RickRule's sentiment about the appeal of silver stocks in the current market climate. In a reflective moment, Rick also states a changing stance on gold, particularly among younger investors. He anticipates this shift may initiate a bull market and emphasizes his preference for high-quality companies in the coming years. Let's get back to the interview.
The silver stocks are for real speculators. I mean, you need to understand that. Too many people, when they look at silver miners and they talk about the deficit, neglect the fact that silver mining companies are fairly small sources of silver, which is to say new mine silver accounts for about 17% of silver supply. Recycling and byproduct production from other mines accounts for most of the supply, which puts the silver miners at a disadvantage. That being said, there is no class of securities that I know of that has more volatility to the upside than silver stocks in the silver bull market. I personally have a goal in the next year and a half, the allocation of silver equities in my own portfolio up to 2.5%, which is a fairly small number. I believe that 2.5% could, if I'm correct about the direction of the silver market, come to comprise 25% of my portfolio through capital gains. With the idea that you allocate on a risk-reward basis, 2.5% is my number. If things go wrong, I lose 1.5% of my portfolio. If things go right, I make 10 times my money. That juxtaposition of risk to reward is something that's extreme attractive to me. Speculators who are thinking about doing that need to take into account, first of all, whether or not they're patient with to do it. It could easily take 2 years or 3 years. Easily. I could be wrong. They need to take into account their tolerance for absolute loss, and they need to work hard to look through the flotsam and jetsam among the silver stocks and find the real ones. For people who are willing to work hard, who are tolerant of volatility, tolerant of risk, and have the financial capability to stand the risk, there is no sector that I could think of that has the potential to be more fun than silver. I do maintain a database of 80,000 investors. And what I notice is that the younger investors, the non-U.S. investors, and interestingly, the younger female investors, have no inherent hostility to gold because they haven't experienced the industry. It's the gold bugs. It's the people that have 30 or 40 years of experience in gold that are feeling hostile towards it. And this is something that just come to my attention looking at my own database recently. Younger investors who I talk to, which are by now most of the additions to the database in the last 5 years, absolutely attracted to the gold thesis. They are absolutely open to participating in gold stocks. It's the people who have large inventories of gold stocks, many of which are junk, that feel hostility. Some of the paradigms need to change. For 50 years, people have invested in gold stocks because they thought the gold price was going to go up. They've looked for leverage to gold. The stocks that have the most leverage to gold are the companies with the higher costs, because as the gold price increases, their margin increases faster. So the gold investors have come to favor, ironically, investing in the worst companies New investors have a very different outlook. They are looking for good companies, irrespective of the commodity. So it's strange that the investors who have the least experience in the industry are at once the most favorably inclined and the most rational. This is the building block, the first building block of a bull market. Intelligent application of capital in a bad market is always, you'll remember the uranium business in 2022. The intelligent application of capital in a bad market is always square one for building a bull market. I feel over the 5-year time frame, very attractive. Not to the gold mining sector, which I think is a disaster, but to the high-quality companies, some of the high-quality companies that grab it today.
As we wrap up, remember that gold and gold stocks can be a wild ride, full of twists and turns. But with the right approach and a keen eye for quality companies, there's potential for some serious gains. With uncertainties and opportunities abound, how do you plan to position yourself in the precious metals market for the year ahead? Share your thoughts in the comment section below, and join us as we explore these trends and more in our upcoming discussions about the silver and gold market. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos.